The BRVM composite index is up about 15% in 2012, lagging the gains we've seen in Ghana and Nigeria, but regional politics and the reconstruction of Cote d'Ivoire were the main themes that defined the region this year. For our review of the BRVM in 2012 and what to expect in 2013, standing by in the Johannesburg studios is Nathaniel Nyinka. He's the head of investments at FMI Africa. Nathaniel, it's great to have you on the show today. And like I mentioned, of course, the major themes that when we look back at this year, will characterize the market in the BRVM. The tensions we saw in Mali, which of course followed the tensions in Ivory Coast, and of course the reconstruction of Cote d'Ivoire. But your thoughts on the BRVM's performance this year and putting all those developments in context?
Good morning, Wale. The BRVM, yes, the performance of about 15% this year has been, I think, actually surpassed a bit of expectations because it's been a year of reconstruction. You would know the BRVM, most of the listed companies are actually of Ivorian origin, and Ivory Coast was just coming out of its crisis of 2011. But what has happened is that post that crisis, Ivory Coast qualified for the HIPC facility from the IMF, and I think that was a major turning point for the performance of the market. What we actually then found was that most of this money was allocated towards infrastructure redevelopment, and it was put into programs in energy, infrastructure, and agriculture. And what we've seen is that these sectors particularly have performed significantly well. But unfortunately, the size of the companies that are listed in these sectors might actually be small. So in terms of the composite index returning 15%, it actually might be misleading compared to a stock-by-stock basis. Because when you look at sectors such as the utility sectors, we've got SODC and CIE, they have done around 138%, 127% returns just for the year to date. And even if you look at sectors such as the banking sector, with the exception of ETI, which really had a disappointing year, we've got SGBCI and the Bank of Africa Benin, Bank of Africa Cote d'Ivoire, and Bank of Africa Burkina Faso that have actually returned in excess of 40% for the year to date. So we've actually seen performance, but it's been on a stock-by-stock basis. The largest stocks in the BRVM 10 index have actually not done exceptionally well. Meanwhile, on the other side, we've had the stocks in the agricultural sector, which is quite a large sector, where we have companies such as SAPH and Palm C having been affected by issues of the 5% tax that was levied on rubber companies, as well majorly by the drop in the rubber price. The rubber price is now at about half of what it was in February 2011, which is really quite low at about $2 per ton, sorry, per kilo.
Nathaniel, if I can take you to the telecom space, Sonatel is one company that when you think of the BRVM, you think about Sonatel simply because, excuse me, simply because of its presence across the region. Your thoughts on how well it's doing, and maybe we can even extend the discussion to what to expect next year.
Yeah, I mean, Sonatel at this time last year was caught in the predicament where its tax holiday, I think in Mali, had actually come to an end. And it was also having issues of the political unrest in Cote d'Ivoire. So the confidence in terms of Sonatel was quite low at this point last year. The stock entered the year at quite a low note, I think around 120,000 per share. It has actually clawed back after the half-year results actually reflected it at something like a 16% rise in earnings. And some of the tax in Senegal had actually been reversed. The tax law had actually been reversed, so it started actually benefiting compared to the position which it had been put on. I think its dominant position is definitely going to carry through, and its cash flow generation ability. But where it gets limited is the fact that one of its key markets, Mali, is currently in turmoil.